Check, please.
Welcome back to Everything Money. In this video, we will show you our 8-pillar process on a couple companies, some of which are not very popular, but all of them meet our 8 pillars, all 8 checks. They are Quest Diagnostics, HPQ, Dick's Sporting Goods, 3M, and Pulte Homes. We'll talk about the financials using our amazing software and show you the stock analyzer tool, how you can use it to predict what you should be paying for these companies moving forward. I bring your questions about these 8-pillar companies to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they will provide you and I with some help and a mindset and approach whether we should be buying or avoiding these companies. Paul, give it to me, babe.
Thank you, Seth. Guys, follow us on Everything Money Investing on our Instagram account, and also follow Seth Moe and I personally, because we do just fun personal stuff on there. So 8-pillar stocks. One thing, guys, and you'll find out later if you join our software, we're going to start sending out in the new year an email every week with an updated list of all the 8-pillar stocks for those who subscribe, because one of our things is the 8-pillar stocks aren't meant to just go out there and buy them. It's about doing more research. I have bought stocks that have 0 pillars, and I have not bought stocks that have all 8 pillars. There's a list we're talking about today. DGX, HPQ, PHM, DKS, and 3M, MMM. I only own one of those, HPQ. Go look at our past videos. You can see why I own it, but I do own HPQ, and it's gone up quite a bit, which is kind of annoying, and I'm one of the few people who actually gets annoyed by that. But the thing about an 8-pillar stock is the reason we created this 8 pillars was Seth said to me, hey, Paul, what are the things you look at when you look at a company? And I rattled off a bunch of things, and it was 8 things, boom, done. It wasn't a way of saying, when I do it, it takes me about 15 seconds because I'm so used to it. But it wasn't saying, oh, these things are all good, let me go buy it. No, it was more of, okay, these things are good, and they also tell me a story. Maybe they have 6 pillars. 2 of the pillars are X's. Let me go find out why that is. And let me go start telling a story about that stock. It's a good starting point, whether they have all 8 pillars, 6 of them, 4 of them, whatever it is. It's about understanding the company. For example, let's say one of the pillars is shares outstanding. If they're going up and they're up 2%, are you going to worry about that as much as if they're up 40%? There are some companies where they're up 300% in shares outstanding in the last 5 years without a stock split. So it's about understanding this process we're creating and understanding a business. I want to look at companies that I look at saying, okay, here's the snapshot. What do I need to learn now about the company to give me more confidence in buying this company?
And Paul, this is not crazy talk. You know, I talked about how I just recently started watching Shark Tank, and these are the exact same questions, verbatim, that they ask people who bring in a company. You know, what do you make? What kind of debt do you have?
So the great thing is we started doing this Shark Tank reaction videos. I don't know if they're going to be, go check them out. They're going to be so much fun, guys. And the great part is, I don't say this to brag, but we'll pause it and I'll say something and it'll be like, then all of a sudden, 2 seconds later, the sharks say it. I'm like, oh, what about the inventory? Sure enough, what's the inventory?
I love when that happens.
Or they'll say, okay, tell us about your numbers. Well, I manufacture this for $1.30 and we sell it for $2. I go, oh, barf. And then all of a sudden you hear the sharks say, going, ooh, that's not good. Or the last one was, we manufacture this for $1.95, we sell it for $12. I go, holy cow, that's incredible. And sure enough, 2 seconds later, the shark's like, wow, that's amazing. This is not profound. Business and investing are very, very similar. The best business people are the best capital allocators, the best investors. I started to learn that. I used to think the best CEOs were the marketing guys. No. The best CEOs are the ones that handle the cash flow the best and know how to invest the capital to get a higher rate of return and build more value for investors. And that's all you're doing. You're the CEO of your money. Go allocate that capital the proper way by understanding what these 8 pillars mean. The 8 pillars are just a way of looking at the company and saying, okay, these has all the things I like. Is there a reason why they're 8 pillars and they should be ignored? Is there a reason why they're all 8 pillars and I need to go put as much money as I can into them? These are the things that you're going to learn from the channel, learn from the community, learn from the software that we have to sit there and go understand these. I mean, if you look up a stock right now.
Quest Diagnostics is our 8-pillar one.
Okay, so DGX.
Yep.
Look, you want to learn more? Annual reports. Go look up their 10K. It takes you right to their 10K on the SEC website. Go learn more about the company. Go read the 150-page 10K or skim it and find the important parts that matter to you to understand more of the intimate details of the company. But I look at these things and I immediately, on the main page here, guys, I selfishly put the things that matter to me. These are all the main things that matter to me. Does this mean this is all that matters? No, but it's my starting point. One of the things we talk about the most, guys, dividends. Everybody takes a dividend and thinks, oh, dividend, they're paying it. That means it's good. I've known multi-millionaires who just look at a dividend and say, hey, it's paying a 5% dividend. I'm going to buy it. What you have to do, though, is, as we teach you, compare it to their free cash flow above. Can they afford that dividend? DGX, it's less than 20. It's about 25%. It's about 25% of their free cash flows paid out in dividends. That thing's probably safe.
Mm-hmm.
Now, one thing I would say about Quest Diagnostics, what would you say about Quest Diagnostics if I just said to you, hey, sounds like a good investment? What do they do?
Lab testing. What has been crazy in the past year and a half? Lab testing.
So I want to make sure this isn't some fluke that once COVID subsides, that they're not going to go back to more normal levels, where I went and paid what I thought was a very reasonable price for DGX, 18 times 5 years profit and 17 times 5 years cash flow, and all of a sudden their revenue and profit fall because they don't need 1,000 COVID tests a day in each location. That's probably bringing them so much revenue. So what do? We go to the income statement, and we look at the income statement to tell us a story.
Yep.
7.5, 7.2, 7.3, 7.5, 7.5, 7.1, 7.6, 7.6. These are the previous years before COVID.
So basically stagnant.
Stagnant. Then what?
Boom.
8.4, 11 billion.
Yeah. You cannot base it off of those two
So
years.
I'm going to sit there immediately and say, I don't know if I buy into this 8 pillars here, because I think it's just going to go back to normal level. Now, it could be like 9/11, where all of a sudden, I'm sure there was some security things that happened in 9/11 that got private jet flights increased after 9/11. And guess what? They didn't subside. They didn't drop. Could that be the case here with Quest? Yeah, maybe all of a sudden people care much more about doing more lab testing and being on the forefront of lab testing.
And just because it goes back to that let's call it 7.5 billion, doesn't mean that it's a bad thing. Just figure it out from there.
I was just going to say, Paul,
Correct.
That's the thing.
Isn't this actually helping our case? Maybe because these elevated revenues are making our PE even higher.
No, making it lower. Because look at the profit too. Profit. 690, 760, 500, 711, 680, 670, 860, 730, $1.1 billion, 2.2. This is driving down the PE. The PE, the earnings are 3 times higher than they were 3 years ago. So the PE is showing a much lower level than it actually should.
Driving down the PE.
Because the earnings part is going higher. So when the PE, the earning goes higher, the PE goes lower.
Got it. I was confused there. Okay.
So I look at this 8 pillars going, wait a second, I'm probably not buying Quest Diagnostics right now.
What about something like HP?
Let's go look at 8. Well, we already know I own HP. So let's go to our 8 pillars. HPQ. So this company's at 38. Oh, it's 38 now? Damn.
Good or bad?
Well, I bought it at like 31 and I was like, oh, I was selling. Maybe I bought it at 27 or something like that. I don't know. Look, big things to me here. Buying back a ton of shares. Price to free cash flow last 5 years, 10.3. Price PE, 10.5. So very consistent. All right, let me go to their income statement. Boring company. 120 billion in revenue, down to 112, down to 56. They probably sold some divisions off. Now it's at 63.5 billion. Very, very small growth. Okay, small growth means boring, means people don't buy the stock, which means the stock price stays low, which means smart guys like me can go pick up shares at a lower price. Okay. And they're going to keep buying back shares and keep getting more and more percentage of the business as time goes on, and the earnings per share will drive up higher and higher as they remove more shares from the market. Boom, I win.
Yeah, that's true.
It's going to take time, but eventually it'll happen. That's the idea behind value investing. And I do this 30 or 40 times with 30 or 40 companies that look like this. I'm going to make a boatload of money.
And you can too?
And you can too. The hard part is here, the emotion of it. It's not here. It's not the numbers. The numbers are the easy part. But part of our community is about being around people who are like-minded, so we're all there supportive.
I don't mean to digress, Paul, but I played poker for the first time in 8 months.
Oh, when?
Just around Christmas. And the value of vesting approach, the patience that I have learned, that while the rest of the table is counting their chips with huge smiles on their faces, I wait for that one time, Mo, to strike with like 3 of a kind or a full house and just take everything. And boy, it's a real lesson in like life, this concept of be patiently waiting.
I actually get very annoyed playing poker with people who have no process and then brag about winning. And I'm like, this is exactly like the investment world.
Yeah.
That's exactly what poker and chess are very similar to investing. It's about making the right moves that don't pay off immediately, that pay off in the long run, following the process that works.
Talk about PHM, Pulte.
Okay, so Pulte.
Pulte's an interesting one.
Why is that, Mo?
Actually, all home builders are.
Yeah.
They're just confusing.
It's confusing because their debt levels are relatively low.
Very low. Not
And
relatively
you
low,
would
very
think-
low.
Yeah, you would think that they would be high. I just don't understand it.
But the thing about, I feel like it's feast or famine with these guys. I just avoid a lot of home builders in general.
I mean, you can look at KB Homes, probably Lennar. They're probably all in that same boat.
Listen, they make money by developing.
Yeah.
So which means even in hype markets where things might be too frothy. Now, I'm not sitting there saying there's going to be a crash in home prices. I actually don't think there will be. As long as inflation stays up and continues going, there won't be a crash. And I do believe that the crash of the late 2000s was caused because of fraud. I mean, people not even proving their income. You know, you make $6 an hour, you claim you make $30 an hour, everybody approves you, but there was that more prevalent than today. I don't hear about that today. In fact, I get annoyed now when I want to get a home loan and I have to jump through hoops going, guys, this is me.
I can pay for this like 5 times over.
Yeah, I'm like, I'll just pay cash for this thing. You guys are idiots. Like, what are we doing here? You know what I mean? But I like that. But back in the day, it was just like, if you wanted $1.5 million loan, just showing $200,000 in income was fine.
Yeah.
What
It's
about
crazy.
What about Dick's Sporting Goods?
I like Dick's because of Tim just slapped his head. I love Dick's. The thing I like about Dick's Sporting Goods is, first off, when I want to go buy sporting gear, I never go to Amazon. I always go to Dick's. Even Dicks.com I do. Dick's Sporting. Don't go to Dicks.com. Go to DickSportingGoods.com.
Nobody
got time for that. I've done that before too. And I like how they've transitioned themselves to be a very good go-to on the internet age going through there. By the way, I want to make note that the doppelgangers, when we were in Austin, and Mo and Nicole were coming down the escalator, and that was at a Dick's Sporting Goods. So thank you very much, Dick's. But look at their income, their revenue. I mean, when it comes to retail, go look at their same-store sales. I mean, this is consistently growing. Look at this. I'm actually surprised by this. Dick's has done a great job of being the go-to online and in person. It's a great place. I mean, with sporting goods, it's a fun place to go. I really do enjoy going to Dick's. Sometimes whenever I want to waste time, I go to one of two places, Dick's or Best Buy.
Yeah, just surf.
That's where I go. When I want to waste time or I want to buy something, I go to Dick's or Best Buy.
Is Best Buy an 8-pillar stock, Tim?
Yeah.
It used to be.
I think it is. As of like last week, it was. I think.
Really?
I think so.
Yeah, you and I just
They got
love
hit
this
pretty
place.
good recently, so it made me look at them.
Oh, 1X.
Oh, the cash flow's down.
Yeah. That's not down by much.
What
Yeah.
about 3M, Paul?
Recently, it was.
We teased it.
MMM.
Mm-hmm.
Now, guys, one thing we want to do in the future that we haven't done, we want to back test the 8-pillar strategy if you just bought the 8-pillar stocks and how they would do. We did a minor version of it on a Bloomberg terminal as far as we can get as much, we try to do it as much as we could, and it ended up being the market over long periods of time. But we will do it with our software. That's why we have 4 or 5 developers on staff across our portfolio of businesses, because we want to be able to do things like this, back test these kind of ideas and provide the data. Say, listen, if you just buy every 8-pillar stock every year, equal amounts, and you do it over a 30-year period, you'll probably make X amount of dollars and beat the market. I'm quite sure it would beat the market. By how much? I have no idea.
3M's a 120-year-old company. Half of their revenue comes from outside of the Americas, and they have 60,000 products that they carry.
Wow.
I want them to carry one of my products, DGF, but I'm working on it. Keep going, Paul.
So the only thing about, so I look at this, it's an 8-pillar stock. So here's an example, 20 times PE, 18.5 times free cash flow. So I immediately think to myself, okay, it's towards the high end of the level. Do they have growth? That's the story I need to answer. Yeah, there's very little growth. 10 years ago, they did 30 billion. Last year, they did 35 billion. Very little growth. Guys, remember, the faster a company grows, the higher the PE and the multiple free cash flow you can pay. There's not much growth here.
You'd like to see the PE around 15?
Well, I don't know, but I'd put it in Stock Analyzer tool and do my assumptions and see what I need to pay to get a return on my money that's adequate. And that's how you do all these things. You put all these things together in our software, you use them all combined, and it makes you a really, really good investor. And the biggest part is the mindset and emotion. And that's what you'll get from the community of 6,000 people.
If this resonates with you, you can have all this on your phone. You can join our community. The new chat is right in the phone. Paul, to show them how the folks at home can get this.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
Everything we've said in this video is more of a value investing long-term approach, especially with the 8 pillars. But if you want to trade these companies at a quicker pace, you can hide the ticker symbol, follow the trends with Mo and the Bidnast Nation, and he'll show you right now how to do that.
Guys, I'm looking at Dick's Sporting Goods. This is actually looking really good from all 3 perspectives. So right now what we have is this is a long-term chart, and we are starting to move right through that sweet spot. So what I would tell you to do here, we want 3 days of confirmation. That means we want the red line and the yellow line in the sweet spot for 3 days. And as soon as that happens, I'm going to draw a couple of candles, the doji candles. Then we get an engulfing candlestick. That is when we add to it and we go long-term on this. If I'm you, for $100, I might throw a tracker share on here, but definitely put this on a very tight watch list. Make sure you do not miss this move, because I think this does have a lot of potential to run to 120, if not the mid-130s, because this is a really good-looking trend that's developing. You could also, if you don't want to do that, come over and look at it from a swing trading perspective. You're sitting right at the 200-day moving average. You can't break above it, and there's a very simple reason why you can't do that. You are very well below average volume for the last week or so. So all you have to do is wait until you start getting an influx of volume. This trend will turn up, and you'll make some engulfing candlesticks, take profits going into the 25, and hopefully you can break through the 25 and move towards the 50 or 100. You can also come over and day trade this thing. I'm quite surprised here. You actually get a significant amount of movement on from a day trading perspective. Consistent volume throughout the day. Yesterday, over 80%. Great engulfing candlesticks. I mean, this is a great move to the top. And today, you're almost to the point where you can go short on Dick's this morning. So this is a really good looking stock from all 3 perspectives. If I was you, this would be on my watch list. I really think that you guys need to catch that long-term trade. So if you want to learn these rules, come and join me in the Bid and Ask Nation. You get access to the Trading 101 series, which is a video series of everything that you need to know, all the rules that you need to be successful. The Employed Trader series, which is 6 stocks that I go through every day from a long-term and swing trading perspective, and I update you on daily. The exclusive Saturday seminars, 1 Saturday a month. I do a Q&A just with the Bid and Ask Nation and the chat community of 950 plus people. Come and join us.
That's our take. Stay calm, 8-pillar on. You will love the software. Frankly, Paul, I don't know how people are making investing decisions without something as easy as this. Firing up on your phone, learning about a new company, going through the software and getting all the 8 pillars and looking at them to start, getting quick access to 10K. It's just awesome. And so
we just hit 116,000 subscribers.
Congrats.
Oh.
If this speaks to you, join the community. You will love it. See you next video.